The U.S. stock market experienced its worst day in 5 years due to escalating trade tensions with China. The Dow Jones Industrial Average plummeted, with futures predicting a significant drop at the opening bell. Other major indices, including the Nasdaq and S&P 500, also suffered substantial losses. Investors are reacting to the uncertainty surrounding global trade relations. The fear is palpable, evidenced by the sharp spike in the VIX, a key indicator of market volatility. Oil prices have also fallen sharply, signaling a potential slowdown in global economic activity. The Russell 2000, an index tracking smaller companies, experienced a significant drop. This market turmoil comes as China retaliated against U.S. tariffs with its own set of trade barriers. The current climate is one of apprehension as investors anxiously await further developments in this high-stakes economic standoff. China responded forcefully to the U.S. tariffs, announcing retaliatory tariffs on a wide range of American goods. These tariffs target key American exports, including agricultural products and manufactured goods. This tit-for-tat escalation has heightened fears of a full-blown trade war. China's decision to impose reciprocal tariffs is a clear signal of their readiness for a protracted battle. This escalation has spooked investors globally, leading to a mass exodus from riskier assets like stocks. J.P. Morgan has raised its recession probability significantly, citing the trade war as a primary factor. Economists warn that the tariffs will likely lead to job losses, particularly in sectors heavily reliant on exports to China. The International Monetary Fund, IMF, has urged both countries to find a resolution through dialogue and cooperation. The current situation underscores the importance of international cooperation in maintaining economic stability. The escalating trade war between the U.S. and China is poised to have a significant impact on various American industries and consumers. The agricultural sector, particularly soybean farmers, is bracing for a direct hit as China is a major importer of American soybeans. The tariffs imposed by China are expected to disrupt this trade flow, potentially leading to a surplus of soybeans and lower prices for farmers. The technology sector is also feeling the heat. Tech giant Apple, heavily reliant on China for manufacturing, saw its market value plummet following the tariff announcements. Other industries, including automotive and consumer goods, are also expected to experience disruptions and higher costs due to tariffs on imported parts and materials. Consumers are likely to feel the pinch as well. The tariffs are expected to lead to higher prices for a wide range of consumer goods, including electronics, clothing, and even groceries. This could put a strain on household budgets, particularly for low and middle-income families. Companies in sectors hit by tariffs may be forced to scale back operations or lay off workers, leading to higher unemployment. The ongoing trade war between the United States and China has created a climate of uncertainty in the global economy. The potential for further escalation remains high, and the stakes for both nations are substantial. While the Trump administration maintains that the tariffs are a necessary tool to protect American interests, critics argue that they are counterproductive and harmful to the U.S. economy. The tariffs have already disrupted global supply chains and increased costs for businesses and consumers. The longer the trade war continues, the more pronounced these negative effects will become. There is a growing consensus among economists that the tariffs will ultimately harm both the U.S. and Chinese economies. Despite the current impasse, there is still hope for a negotiated settlement. Diplomatic channels remain open, and there is ongoing dialogue between high-level officials from both countries. The current situation serves as a stark reminder of the importance of international cooperation and the need for finding peaceful resolutions to trade disputes.